Hello, welcome to our very popular roundtable. We are back with our favorite people, Steve Saretsky out in Vancouver with Oakwin Realty. Hi, Steve. How are you doing?
Good, good. Always a pleasure to do this. Lots to
And
talk
John,
about.
oh, sorry. And John is here in Toronto with the Realosophy Realty, where he heads that up. Hi, John. You're also in a white shirt. You
I
guys are
am.
both what, home team today?
We're rocking the white shirts today.
Who's home and who's away? It's
Yeah,
confusing.
seriously.
Trying
All
to keep
right.
it professional here.
All right. Well, let's start. A bit of a change of tune, I think. Headlines are screaming about bidding wars being back. The market is heating up. What is going on? Is it the start of another bull run?
Steve, want
Who
to
wants
start?
to start?
Sure. I mean, I don't know if I'd say, I'm hesitant to say it's the start of a bull market, but I definitely feel like we've kind of hit like a bit of a turning point. I think we started to see things kind of heat up towards the end of December into January here, but like it's thing like the sentiment is different, right? I think like that's the thing is like I think we try to look at the data and then the listings and the sales, and so a lot of times it's like you can't map and measure sentiment. Like a lot of times you have to like get out there and feel it and talk to people, and I think this is where like a lot of people miss like these turning points. And so to me, it feels like you're kind of at a bit of this turning point right now. We'll see. I mean, this is still a lot of things that can derail this, which is I think like, are we actually going to get the rate cuts that we expect? Our bond yield's going to behave? I think there's a lot of that that's still up for discussion. But I think as it is right now, we're seeing multiple offers. Stuff that's been on the market for many, many months is suddenly sold. And the inventory right now, coming out of December, not unusual into January here to have low inventory, but it's tight. I mean, the buyers are out there. There's discussions about rate cuts, and I think just the general sentiment, Canadians do what they do best, which is when they hear low rates or lower rates coming, they start to move. And I think that honestly, I think that's what we're seeing.
I've always thought there would be a return to our favorite Canadian pastime once we saw the hint of maybe a rate peak. But John, you're the expert. What is going on in Toronto? There are bidding wars, but talk in terms of like, are we really seeing an uptick in sales volume? Where are listings?
Yeah, I mean it's it's super interesting. I mean, I feel like it is somewhat like the beginning of last year, where I agree with Steve 100%. The sentiment's changed. I mean, if you look back in the fall, the market was extremely slow. Places were sitting, like very few multiple offers, if any. Places were taking a lot longer to sell. And I mean, literally, like the new year started, and all of a sudden things are going nuts, right? And we are seeing a ton of multiple offers. I mean, again, part of this is agents just pricing ridiculously low in some cases, which they normally do, but in some cases it's just getting ridiculous. And I think if you're a buyer, you need to be cautious. Like, you need to have a good agent who's going to tell you roughly what it's worth, because I see some agents like listing homes for $999 that are really worth like 1.4 million, right? And you get buyers thinking, well, what if I get it for 1.2? That'd be an amazing deal, but you're not going to get it for 1.2, right? And this is, I think, a trap that a lot of buyers fall into. It's like they're focusing on the homes based on the list price rather than what it's worth. So they're kind of passing on homes that they can afford, chasing ones that are kind of out of their price range. And that's the sentiment we're seeing right now. It's kind of busy, especially for houses. I mean, to me, the most surprise, so sales for houses are up like 30+%. The most surprising stat for me was that condo sales are up 40%. So that's January this year over January last year. If you asked me a couple of months ago, the condo market was the segment I thought would be a little slower. Partly because, like, historically, even in the resale market, a lot of investors are buying condos, and I didn't think we'd see a lot of uptick in that portion of kind of buyer demand. So it's surprising to see kind of sales up even for condominiums as we start the year.
Do you get a sense of whether that's a lot of end users looking for condos?
Yeah, I suspect that in our experience, like mainly end users, it's really hard to make the numbers work as an investor. But listen, there's gonna be some of them, but yeah, it's a little bit tighter.
John, I feel like we always have to like add this little asterisk into the show for people that maybe haven't followed along from episode one.
Mhm.
But when we talk about like bidding wars, right? People go, well, that's because the realtor listed it low. What a stupid, policy that they're doing. And while I totally agree with that, you have to keep in mind that like any like competent listing agent, their job is to always maximize the end price for the seller. That's what they're hired to do. And so you only list low to get multiple offers to then drive the price up if you have confidence that the market is there to support that strategy.
Yeah.
So like you never like I've had clients ask me this in down markets, right? Again, if it's worth, like you said, if it's worth, 1.2 million, listing at 999, yeah, you'll probably still get 5 offers, but it might only get driven up to 1.1.
Yeah.
And the market, we feel market value is worth 1.2. So, you don't want to deploy that strategy in a softer market. You probably want to list it at 1.3, give yourself, $50,000, $75,000 negotiate, right? And like what we're seeing now is like, yes, people, like we're starting to see again, realtors starting to strategically price a bit lower because they know that the buyer demand is there to actually drive the price where it ultimately needs to be.
100%. And
Thanks, Steve.
and just to add on that, I mean, you're 100% correct. And to add some context, the pricing below what it's worth, as Steve said, only works when the market's crazy. So for context, when the market was insane, like at the peak of the market, 80+% of homes were selling for over asking, right? Whereas in today's market, even though we're talking about bidding wars and over asking, it's only about a quarter, like about 25% of sales. And those stand out because, 3/4 of the listings on the market now are stuff that's been sitting on the market since December. It's overpriced. The nice stuff that hits the market that's priced well is the stuff that's selling quickly, right? So it's still not as crazy as it was like at the peak. It's only like 25% of homes selling for over asking, but those generally are the new listings, the nice listings, you know what I mean? So yeah, I think people need to take some of these stat points with a grain of salt.
Well, I think that's where, like, I mean, that's to say, you see some of this like analysis on, Twitter and social media and things of that nature. And it's just like, yeah, I think a lot of it's just really like bad analysis. Like it's taking certain data points and framing it to form like a narrative or a view. I think there's, like I said, I think when you're at these turning points, I think you kind of have to like map and measure sentiment and really like get a feel for the changes. Yeah. So anyways, I think that's what we're seeing today. We'll see how that shapes up in the spring, but I think it's important context for people that are following along.
Sure.
Yeah, so you're touching, and thanks for clarifying, Steve. A couple of things I was going to say: the bidding wars are back, and that is usually accompanied by that strategy of listing low to attract interest. You get more buyers in there thinking, okay, maybe this is in our range. But to Steve's point, you don't see that strategy being used as much in a slower market. Then people tend to price at what they want and hold and wait for the right offer. So that in and of itself is interesting. But again, there's also seasonal quality. Like I've been watching this market now, how many years? 10 at least closely. And there's always a bit of a bunch up in January, February, because more buyers come out ahead of sellers generally.
Totally.
So
Yeah.
we might be seeing a bit of a confluence of these two things. However, going back to what you guys were saying about sentiment, the reason for this is partially because of interest rates. Now, while the Bank of Canada and the US Fed held their rates recently, there are signals, both in their speeches and other, market expectations, that cuts are coming this year, up to 2 to 3 in both markets. Now, alongside that, though, there's been economic data showing the Canadian and especially the US economy performing better than expected. So does that mean actually high rates will hold a bit longer? So here's one expert poll saying, okay, in Canada, rates will probably start to come down in April. I've seen other economists, some leading ones, saying, nope, this isn't happening till June or July. So I guess my question for you two is, when do you think we'll start to actually see rates coming down? I don't know who wants to start. I know this isn't always your favorite.
I mean, I'll
okay,
say,
good, Chris. Good.
If we're gonna bet on it now, obviously a lot can change each month, but like I'll go with June. I think that's. Yeah, I think the one thing I just add to that is like, maybe, so if you do get some cuts, like I think if housing goes on this, like we're talking about housing starting to go through this like transition period where things are changing, it's getting busy. I think that if housing really takes off and accelerates through the spring market, like I think it gives more ammunition for the Bank of Canada to sort of push those rate cuts further out.
Mhm.
And instead of like, I think the markets are expecting almost like, I think it's 4 cuts from the Bank of Canada by the end of the year. So it's like, again, if housing's holding up just fine and the economic data looks okay, like maybe it's only 2 cuts this year. And like, for a lot of people that are renewing their mortgages or on variable mortgages, your variable goes from 6.5% down to 5.5%. Like, I don't think that's going to do a lot of favors for a lot of people. So there might be some disappointment there.
Yeah.
Is it maybe this talk of a soft landing, John, that's also adding to Canadian confidence? It's not just like Steve's saying, the rates may not budge a lot, but it seems like this good economic news is kind of filtering through. What do you think of that news and what the expectations of soft landings?
Yeah, I mean, I think there's a tension. I mean, we hear about insolvencies and businesses, so the data is a little bit mixed, but I tend to agree with Steve. Like if we do kind of hit this soft landing, if the housing market's strong, I mean, even though the bank doesn't target housing specifically, it's obviously part of our economy. Yeah, you might see fewer cuts and probably later in the second half. I'd have to agree. But we'll see.
We're starting to see like obviously like bond yields pushing back up again, right?
Yeah.
So coming into the end of December, right? We had mortgage rates like high 4s, low 5s, and I think we're getting, we're pushing back up again. So, I think what could kill this, this pivot or this change in the market again, if you get, mortgages back with a 6 in front of it, I think it's game over once again, similar to what we saw last year. So, I think we're kind of balancing on a bit of a knife's edge.
So let's say this soft landing and cuts starting to materialize does happen. With prices already so high for homes and the run up in interest rates is still there. So it's not like interest rates are going back to 2 or whatever. How much impact do you guys really think that would have on the market in terms of, we've just seen historically low sales, right? We're talking 20-year lows last year. What do you think that would mean? Like, are we talking a full recovery of the market? Or are we talking about a level of activity that we probably haven't seen still,
If rates do drop, you mean?
Yeah, even if rates drop, like, are we really going back to these boom times? I mean, prices are already extremely high for the average buyers, right? Rates during, the last decade, let's say, we're talking really low rates. We're not going back to that.
But I think,
right?
no, we're not going back to that. But I mean, if rates go back to the 4s in the second half of this year, yeah, I think it's very possible you're going to see a slight bullish market. Like we have more demand and positive sentiment. We don't know where prices are going to go. They could stay flat first half of this year, but I think with rates in the 4s, you're going to see a lot more people jumping back in, and that's kind of what we saw last year, right? I mean, prices went up 200 grand, on a low-rise home, literally in like 4 months in the first half of last year, largely because of that. So I think it's possible for sure.
I think, yeah, we saw that same thing too here, right? Like in Vancouver, it was, coming out of 2022 at the very end was like the low. I think that was like the price lows today. Here we are, almost basically 2 years later, and that was kind of the low. Was like the end of 2022. Yeah, we saw a big rip in the spring of 2023, and then rates pushed back up as the Bank of Canada had to come back out and start hiking again, and that killed the market. But yeah, in terms of pricing, we're still not back to the 2022 highs, and we might not get there for many years, despite mortgage rates coming into the 4s potentially.
Yes, I'm thinking, what about the investment activity that we saw that led to such highs? Like it at 4% and stuff, is that going to be as strong as before?
I think it's harder. I think it's harder for people to make it work with those numbers. Yeah. I mean,
yeah, I think the days of like the pandemic where everyone was refinancing their house and pulling equity because they could borrow at 1.5%, to pick up a condo. Like I said, I don't think it works even if the mortgage rate's 4.
Yeah.
So I think that, you're always going to have investors in the market, but I don't think it'll be a fraction of what it used to be.
Yeah.
Right. And not to mention those pandemic savings are probably now well and truly gone. with many businesses scrambling to pay back loans and things. So, all right, before we get off the interest rate corner, I just want to share this quote from Tiff Macklem. I thought it had a charming Yogi Berra type quality to it. He seemed quite frustrated when he, in his remarks, said he was being peppered with a lot of questions at the House of Commons Finance Committee about housing affordability and whether the bank's own role in increasing shelter costs for many homeowners pushed up mortgage by pushing up mortgage rates. And he said, basically, why are you looking at us? And he didn't say that. He said, you're not going to solve housing with low interest rates, and you're not going to solve it with high interest rates. We've tried both, and we've had high shelter price inflation. It kind of made me laugh.
It's a bit of a funny quote.
It's funny. I mean, there's frustration, and I think it does lead me to ask you to, we focus a lot on interest rates when it comes to housing, in both environments for different reasons because of also how our inflation is calculated. It seems, I mean, he's right in a way that it's been a bad news story both ways.
I mean, it's a bit of a weird situation because, lower interest rates, like on paper, make housing more affordable because your mortgage payment's lower, right? But that assumes prices stay static. But of course, lower interest rates fuels demand, which drives prices higher, right? Which has sort of the opposite effect in the medium term. So it's you can't say interest rates overall during the pandemic, we saw that their effect was that because they lower borrowing costs, they actually fueled demand and prices exploded. So yeah, we're not solving affordability through monetary policy.
I mean, I think that's the thing though, is like it's such a nuance, like housing is so nuanced. I mean, I've been very vocal about berating the Bank of Canada for keeping rates, far too low for far too long and juicing, the housing market where it is today. But I think at the end of the day, there's so many factors, right? When you add 1 million people a year into this country and, the ability to add new supply, John, you've talked about it's difficult, right? To get trades, to get the access to credit, to get the investors to buy the units so you can actually launch them. There's so many nuances that are involved. And I think that we're seeing that today, right? I mean, the biggest thing with like high rates today, he's killing off demand by raising rates, clearly. Yeah. But by doing so, at the same time, you're actually killing off new supply, right? I mean, I think he talked about in Parliament there. He's aware of his actions, which is like for a developer, when your cost of borrowing on a $100 million project, goes up, it more than doubles. That impacts the economic viability of those projects, and so that's what we're seeing. Housing starts, got crunched last year. They're going to get crunched again here in 2024. And so it seems like we're kind of in this perpetual, never-ending sort of circle trying to figure out how to fix the housing market.
I think Tiff is pushing back there a bit, saying, politicians, there are some other things here. I got the sense that if he could start reporting on inflation with housing stripped out to benchmarks, maybe a lot of central bankers would like that. I know there was some talk of that informally, a lot of governors started saying things like, and heads of banks saying things like, if you strip out housing, we're actually really close to our 2%. So,
can I just like jump in there? I just think it's interesting for people that are, keeping score at home, just to highlight all of the policies that we've brought in over the last 7 to 8 years to try to make housing quote unquote more affordable. Let's just walk through it, right? So you had mortgage stress test. Then you increased the mortgage stress test. You brought in for uninsured mortgages. You brought in a foreign buyer's tax. Then you increased the foreign buyer tax. Then you brought in Vancouver and BC, we have a speculation tax. We have, the empty homes tax. We've got, luxury home taxes. I'm trying to think what else we brought in. Then we raise interest rates, almost 500 basis points. That hasn't really made housing more affordable. And so it's interesting. I mean, there's so many policy levers now. They're trying to obviously impact and change zoning. We'll see if that ends up doing anything. But governments have now. We banned foreign ownership. We just extended that another 2 years apparently. Yeah. So, it seems like we've done a lot of things, but housing is still pretty broken in this country.
Yeah.
It's I was demoralizing today, Toronto Star article, I'm putting it up here, saying that Doug Ford government in Ontario's attempts through the Build Homes Faster Act to force municipalities to okay things is leading to a charge from developers saying it's making things worse
Oh, really?
already.
Wow.
Yes. Lengthy article from it. And one of the problems is because the province is just trying to, take a hard line and telling municipalities you have to refund fees for applications if you don't do X within a certain amount of time. Well, guess what the municipalities are doing? They're requiring lengthier pre-consultations.
Interesting.
So apparently this is now just adding a new layer. So I agree, Steve. I mean, sometimes, do you ever get depressed?
I think a lot of people are
like, at the end of
depressed.
the day, it's like,
Oh wait,
I
that's a
understand.
different conversation.
Yeah, I get the public frustration, right? It totally
Yeah.
makes sense. I think it's kind of sad to see what it's become.
Yes.
But at the end of the day, it's like John and I, we can't control it. I mean, you just at the end of the day, you have to kind of operate in the environment that you're handed to you. And so I try not to get emotional about, markets going up, markets going down. Like it is what it is, and you have to kind of work with what you got.
Right. Well, let's talk about things, these policies. So on top of all the measures you talked about, Steve, let's keep going. The Canadian Federal Minister of Immigration, Mark Miller, a week or two ago, made a pretty landmark announcement that they were going to severely limit student visas for starting in the fall term. They singled out 3 provinces in particular, Ontario, BC, and Nova Scotia. I think they were aiming for a 33% reduction in students being approved, the visas being approved. But the way that hit, because Ontario has really, really gone hard, the Ontario's institutions have gone really hard with upping their foreign student numbers, they are going to see a 50% reduction. So a lot of people sort of pushing back. Will Miller hold? I suspect he will. Without going too much into the details, in Ontario, one of the biggest problems was this sort of licensing agreement. So we had a lot of private institutions. It seems like, these unscrupulous dealers with strange institutes in strip malls, people are saying above massage parlors, being able to license and provide the curriculum of more established colleges that we would recognize were part of the problem. So that's very, very big news in Ontario. Steve, in BC, was there a lot of pushback and noise from the education sector?
I don't think the foreign student thing is as bad in BC as it is in Ontario. I think there's some stats out about that, but yeah, I wouldn't say there's been like a ton of pushback. I just don't think it's as big of a story as it is in places in Ontario. I know like Brampton's been getting a really bad rap and in recent weeks, 25 students living in a basement suite and, these crazy stories. But I don't think you hear as much about that in BC.
So, interesting. Thanks, Steve. So, John, you were talking about this in Ontario. There are certain markets. Steve mentioned Brampton, right beside that Milton, where one of the colleges that is established that has really expanded its foreign enrollment is Conestoga College. They've now expanded their campuses. Milton's a big one right beside Brampton, but also other secondary markets like London, Ontario. I would think that this cap could hit rents in those areas. But you have a video out on this same channel at Move Smartly suggesting that the impact might not be as strong as we think.
Well,
because
I think the thing is the decline is going to be, it's not so much a decline in the number of students, it's a decline in the number of people they're admitting next year relative to last year, right? And I think when we look at the numbers, probably the students who are exiting the program now is probably going to be very similar to the ones entering. So I don't think it's going to be an actual big decline. It's probably going to be very similar volume in terms of the number of students here. But yeah, I mean, listen, it's possible we see a slightly bigger decline in markets like Brampton that are highly concentrated. So some schools might see a disproportionate impact. So that's what I say in the video. In some markets, yeah, you might see a a bigger hit in rents because certain schools in certain areas might have a bigger chunk of that decline relative to other universities.
And moreover, with the suspension of that public-private licensing scheme,
Mm-hmm.
I
Exactly.
suspect that some of the people who were investing, now I'm not sure people ran out to buy these houses so they could rent them out to 25 students. But we even ourselves have heard anecdotally about people hearing their friends being able to, buy properties and lease them to students. So, I'm wondering what you think the impact of that might be on the margins. Could
Yeah,
we see a few people deciding to sell or
possibly.
getting
Yeah.
out of that?
That's been a huge market. A lot of investors buying in Brandon specifically to rent out to students, right? So there's tons of rooming houses there, like these illegal rooming houses. So yeah, you might see some of those investors, if they see demand is soft in September, they might just sell if they can't get, because those numbers aren't going to work if you're renting to a family. They work if they're renting to 20 students at $500 a student.
Right. I mean, some
That's a
very
lot of money.
unscrupulous behavior. Yes.
Yeah,
And
yeah.
also mayors stepping up, Patrick Brown and Brampton, trying to curtail some of this activity.
Mhm.
Looks like that game might be up for a
We'll
few
see.
operators.
Yeah.
So we'll see. All right. Now let's talk about rents more generally. John, let's start with you in Toronto. It looks like rents overall came down by something like 5% in the last 2 quarters of the year. What's going on with the rental market in general? Why would we be seeing that?
Yeah, it's interesting. So, I mean, rents usually dip in the last quarter of the year for seasonal reasons, but it's above average. There's a lot of people thinking this is the beginning of the end of rents and rents are going to plummet, but it doesn't look like that's the case. I mean, when I looked at the data, what happened was there's a massive surge in rental listings in the last quarter of 2023. And it looked like that had to do with a lot of new condo completions. So when you look at the data, for example, if you compare like 2023, like the last quarter to the previous year, there were in 2022, in the last quarter of 2022, there were 2 condo buildings that had more than 100 rental listings. So that kind of gives you an idea of like a new building that just is a flood of new rental listings. In comparison, last quarter, there was 11 buildings with more than 100 rental listings, right? So this, of course, is contributing to the supply. We're seeing a slight dip because of a supply shock. I think once the market clears, you'll start to see a little bit more stability in rents.
So basically, a lot of that is new buildings completing.
Yeah, new
and
buildings
so
completing.
adding to the rental supply.
Yeah, and listen, the flip side to that is, with all the doom and gloom about investors defaulting and not closing on their new condos, I mean, this is an indication that thousands and thousands of them closed. And they took possession, they got their keys, and now they're renting their units, right? So while there are some that are distressed, thousands of them completed and took their keys and are renting their condos now.
Steve, are you seeing anything like that in terms of a completion surge impacting rentals?
Not really, to be honest. I mean, the rental market, I don't have a whole bunch to add to it. Just purely, anecdotal, which is chatting with, property managers in the city that manage, hundreds of units. Rents softened quite a bit into the fall, into the winter. Partially seasonal, but yeah, John, to a similar point, felt like more than the seasonal. What I'm hearing now is it's starting to heat up again. So we'll see what the kind of the year looks like. I think, conversations with friends and stuff that are looking for rentals, it's still really tough, really competitive. Not a lot of great inventory out there. So I would say overall, it's still a pretty tough, pretty tight rental market.
Pushing back a bit on you, John, a question I have for you, looking at Urban Nation's recent report, they cover the new build market extensively, and their head, Sean, was mentioning that 2023 saw a record, not a record, but a near record. There's, I think, only 3 years in recent memory of seeing more than 20,000 units completing and coming onto the market. And now in 2024, they're expected to see over 26,000 new units come onto the market in the Toronto area. Now, to me, that seems like a lot of supply. So are you really thinking everything's going to get absorbed and that there would never be any downward pressure if we assume a lot of these owners are looking to rent out those units?
All right, our tough interviewer today. You make a very good point, actually, and I do think the majority of the completions expected for the GTA or for Toronto are in the first half of the year. So yeah, if you have, and I think they said 18,000 completions in the first half, yeah, you're probably going to continue to see some pressure on rents because a lot of those are going to be investors who needs to rent them out. So the rental market may not rebound in the first quarter, right? But I think my broader point is that these are this is like a short-term supply shock, right? And yeah, it might help cool rents in the short term because you have this flood of inventory hitting the market. But we need to separate short-term dynamics from longer term. And again, I think once that is absorbed, whether that's later next year or later this year, you'll eventually see some stability in rents. But to your point, yeah, if we see a ton of new completions this first quarter, yeah, you could continue to see a little bit of pressure on prices.
I think there's also like, just to jump in there, but I think like this whole conversation is really illustrates a point that like when John and I talk about like the housing market sort of making a turn and things are picking up and feels a heck of a lot better, is that there's a lot of nuances that go with it. It's not like broad strokes. I think there's lots of portions of the market that are still really struggling. And I look at that in Vancouver anyways, pre-sale construction, still quite a few, but people that have closings coming up for these new condos that I don't know if they're gonna be able to qualify or afford or be able to rent out and not lose lots of money. So and developers, there's still tons of developers that are really struggling. There's going to be quite a few more defaults. So I think we have to kind of like pull that away from what's happening in the resale market.
Yeah.
Because that to me feels like a much different beast, particularly at the more affordable price point levels. That's a relatively tight market. So I think it's quite nuanced, I'd say.
Great point. And that actually leads to another big headline in the Toronto Star, putting this up here, staying with Sean of Urban Nation's recent report, saying that 41% of, I guess, condo inventory is now unsold. So he's saying there is a glut now collecting the Toronto market that he hasn't seen in quite some time. So presumably, and I mentioned that is in the backdrop of all these new completions coming on board. And I guess the same question for you too, John, is does this mean no downward pressure on condo sale prices? If the pre-con market, and I know there's a bit of a disconnect and they're not the same market, pre-con and resale, but surely there is some connection between the two. So, this surge and this, all of these units still sitting there, some of them.
So yeah, the units that are sitting there are pre-construction for the most part, right? So they're largely projects that have launched. The builders have started selling units, but they haven't sold as quickly as they normally would have, right? So I think they said the Toronto area has something like 20 months of inventory or something like that. So what's realistically going to happen is if those projects don't sell, whatever it is, 70+% that they need to sell within a certain period of time, the project's just going to get canceled, right? And those are not going to get built. And Steve made a very good point. The dynamics are very nuanced. Pre-construction is very slow because the gap between resale and pre-construction prices is like massive right now, right? You can get like a resale condo for $1,000 a square foot, or like buy a similar new one for $1,500 a square foot across the street. I mean, who's paying $1,500 pre-construction when you can buy $1,000 resale, right? And that's the problem we're having.
Yeah,
and for a while, oh, sorry, Steve.
So
go ahead.
obviously, when the market's going up and everybody thinks prices are going to be, keep going up 10% a year, I think there's investors, in my opinion, certainly not NAMI clients. I think it's still hard to rationalize, but there is a market for that where people do like to speculate on pre-sale contracts. And I just don't think we're in this environment now where there's still a lot of faith in price growth. And like to John's point, that gap is so large now. So like anyways, what we see here in Vancouver is like if you're going to launch a pre-sale, the stuff that will still sell and will still sell quite well is if it's built to like an end user market. So we're talking like low rise wood frame condos at these sort of right price points. So like for example, in East Vancouver, $1,200 a square foot, those will sell just fine. low rise wood frame townhouses. But as soon as you start building these like expensive concrete high rises, there's no market. Because the developers like in Vancouver, you got to sell those at like minimum $1,700 a square foot, and there's just market is not there. And so those projects, as John mentioned, they won't get built. So that supply is not coming to market.
Thanks, Steve. That's so important. John, I'm one of your closest readers. I remember you writing about this inversion when we started to see that traditionally pre-con used to be priced lower, or you would think, than resale, reflecting some of the risk inherent in tying up your money with pre-con developments. Somewhere in Toronto, do you remember the year?
It was a
That
while
flipped
ago,
over
yeah.
and you were like, what's going on? That gap between the two prices has only increased. And is it just as Steve is saying, investment speculation? Like what is the rationale between that gap getting so large?
It's largely higher construction costs, right? So over the past 2-3 years, development charges from the city went up and construction costs went up significantly during COVID. I mean, I don't know specifically, what segment of the project is, but it's largely higher construction costs, which is why builders have to sell at a certain price per square foot for the project to be even feasible, right? So, and that's why some of them are cutting, but they can only cut so much, right? Because again, like some of these costs are fixed. You can't really control them.
Yeah, so just for like a little bit of like context there, like in Vancouver, right? Like these developers on a high rise project, people look at these prices and go, wow, this developer, he wants $2,000 a square foot. Like, he's ripping everybody off. These are crazy prices. He's all about the profit margin on that. Like when they're trying to hit that, like they'll try to hit like a 15% profit margin back to like all the investors, right? All the limited partner investors and stuff. So like 15% for like the amount of risk that is in those projects. The market shifts in one direction, or Tiff Macklem raises rates by 500, like no profit. You go from 15 to 0 pretty quickly. And so like it's really not like the risk reward for a lot of these developments. I think there's a misconception in the general public that like every developer is like this like super rich, you can never go wrong, they all make boatloads of money. I don't see that, at least in Vancouver anyways. I think a lot of these guys are in the last several years have made no money. Different story, you bought the land 35 years ago. But for a lot of these new entrant developers, I mean,
some are going broke. Some are like going bankrupt, right?
Yeah, let me throw John's tweet up here. Residential development projects across the country are increasingly being pushed into receivership. A year ago, it was maybe a call a month, a call every 2 months, and now it's a call a week. The vice chair with CBR's Land Services Group was saying, and John, to your point, and Steve, sorry, there's a project in Toronto, a tweet here from Jeremiah Seamus, a 39-story high-rise site in the entertainment district in Toronto, owned by a Hong Kong developer, recently sold for $40 million. That's 45% less than it was bought for almost 3 years ago. So the incredible numbers are it sold for $72 million in 2021, which was part of a land assembly. Now, what changed in that time? John, you just touched upon development charges. And Steve, to our earlier point about depression, all these governments are trying to do one thing, but it seems that John Tory, on his way out before his scandal, actually upped developer charges in Toronto, but quite a bit, right? In 2021.
Yeah.
So we've got all these policies at loggerheads with each other. So the 48.8% increase in city development charges in 2022, and a 31% increase in construction costs, and a 57% increase in construction financing costs. All these things are being cited for these canceled projects. Similarly, in Vancouver, there's a big project that went into receivership in January. After the Bank of Montreal basically said the developers owe most of the $95 million that it had been loaned. And I think they've just lost faith. And that loan happened, I think, in 2018. So these are some, sorry, go ahead, Steve.
Oh yeah, there's a lot more coming, and then like we're seeing this on for example, we're seeing this on the land assembly sort of stuff, right? People selling 4 houses and hoping to pack them up into condos. None of that stuff's moving because the reality is the sellers are still stuck on these old prices, and developers can't pay that price anymore for the land and make money because the pre-sale market's not, it's no longer rising. And developers' costs in the meantime have gone up, right? Cost of construction through materials and labor, and then the cost of financing those projects, and then of course the development fees that are charged by these those have gone up a lot, and so there's no money to be made until these like if you look at development land sales, it's horrible right now, and so again, much different than what we're seeing in the residential resale market, but these are the nuances that are happening right now.
Mm-hmm.
And I guess a question to end things today, does that not mean that in spite of all these government targets, or government has targets for ramping up our completion, in Ontario, we can't seem to build more than 60,000 homes on average a year since the 90s. We can't budge on that. What is it in Canada, 200,000?
About 200, 220, something like that.
Something like that. We cannot budge that line. Are we not losing ground with this financing story?
We will be.
Is this not part of the baseline that we're thinking of?
Or permits, starts, completions are going to be trending down over the next few years for all these reasons, right? Like all these the sitting inventory and the pre-con, the units that are not selling, that is going to be years down the road's completions, and they're going to be far lower than this year. So yeah, 100%. We're gonna sort of see that trend down.
So is anyone adding that to the total?
No.
Sorry,
I
Steve,
mean, I said this when the BC government, so the BC government basically came out and pretty much more or less abolished zoning. They basically took it away from municipal governments. And I said this at the time, and I'll say it again. I think the BC government, I think, is well-intentioned. I think it's massive policy, but you can rezone the entire province. But if the projects are not economically viable and developers don't want to build because they can't get access to credit and can't hit their pre-sale targets, it doesn't matter how much land you rezone.
Yeah.
So
even on a smaller scale, Steve, in Toronto, they're doing some assessments of laneway housing, which opened up to quite a bit of fanfare, and how little the take-up has been. And John, I think you were talking about a client recently who, in full excitement, was urged by a family member to build a laneway house, right? But because of the cost of that,
very expensive, yeah,
and the pressure to keep that rented out, is now facing a lot of pressure to find the right tenant. These numbers don't seem to make sense even on the smaller scale. So, I was thinking these zoning changes are so important for so many good reasons. And I wonder if they're going to be a bit of victim of circumstance where, this drying up of the financial situation is going to coincide with one of the greatest liberalizations, both in BC and Ontario, that and quite frankly, I think is much needed for many, many reasons in terms of more sustainable cities, just the way people want to live. But they might be the victims of this other moving part. And that, I think, is a good note to end on. To Steve's point, there are so many moving parts, and everybody's throwing in their measures left, right, and center. And some of them canceling each other out.
At least in the short term, I think the idea is eventually, hopefully, those projects are feasible. But in the short term, you cannot control certain market conditions, right? Which is why condos that were feasible in the past are no longer feasible today. So we'll see how that all unfolds.
Right. So the housing crisis is not going to be solved in the short term or near term. Okay. But there are some good signs. So I think this was a really great discussion. Thanks, guys. I'm going to mention your handles on X Twitter at John Pasalis. You can follow Steve at Steve Saretsky. Emails for John and Steve will be in our show notes as well. If you enjoy our program, find it useful, please share, write us a review, and just otherwise tell us about it. We really, really appreciate you watching and listening to us. And we look forward to you joining us again for our next roundtable next month. See you then, guys.